Hey everyone, my name is Krista Britton and I'm a principal real estate broker with Hillshire Realty Group at EXP, and today I am here talking with Don Mackay.
I'm Don Mackay. I am a production manager with Prime Lending.
So the reason Don and I decided to sit down and chat today was the Fed. The Fed met this week and there is a lot to do about what is going on with mortgages. I brought Don in because he's the expert. He's my go-to for all things mortgages, and I want everyone to actually understand what is legitimately happening in the market right now.
So I guess we can start off and say, what is the Fed?
Yeah.
Because that's always a good one, right? Okay, they meet every 45 days and they discuss monetary policy. They really control what happens through the central banking system, so they're not directly correlated to what happens with mortgages in that sense. All they're trying to do is just really control money flows, and right now, our biggest problem in the market right now is inflation. They have a mandate right now to slow down and stop inflation to get back to its target of what they want at about 2.5%. Right now, it's sitting at about 8.5% on inflation. As we all know, everything's more expensive these days.
Yeah.
But what ends up happening is we always get confused and everybody hears that the Fed's raised rates 0.75% yesterday. Well, that does not mean that interest rates on mortgages went up 0.75%. So there's no direct correlation between those two.
So right now, I like one of the sayings that you gave me when I called you the other day.
Some people have already heard about this, but it's kind of a joke that's been going around, which is marry the house, date the rate. Essentially what's going on, we all know interest rates are really high right now. The interest rates are high, and that's just because of inflation. Once inflation comes down, which will probably be sometime next year, it'll start to slow down, and we're talking 18 to 24 months, we're gonna see interest rates come back down. You know, probably low fours, somewhere around is kind of the target. So really, if you find the house you like right now, it's kind of the idea, buy the house. The payment will go down in the near future.
How does someone go about making their rate go down? Because that's one of the questions I have, especially with new home buyers. They're like, okay, so I'm buying the house now, and this is my rate, but I can lower my rate? And one of my favorite questions is, how many times can I do that?
Well, the truth is, it's just a simple refinance. So you just pay off the current loan with a new loan and get a lower rate based upon what the market is. And there's gonna be an opportunity. I mean, I guess that's the best way to say it, is we all know that the market goes up and the market comes down. So right now we're here, but compared to last year where you had to fight tooth and nail just to find a house, now you don't have to fight as bad.
Yeah, you don't have to fight as hard. Houses are sitting for longer. We're seeing price reductions. Buyers are getting closing costs and repairs. I mean, it's craziness. It's normal, it's great. We're seeing some homes are getting multiple offers, I'm noticing, but some are sitting a little bit longer, but good offers are coming in. There's actual negotiations. Buyers are happy, sellers are happy, but you know, there isn't a line around the block like there was, you know, even 6-7 months ago.
Really popular right now too is a lot of people are using adjustable rate mortgages again.
Okay.
Adjustable rate mortgages just mean that the rate is fixed for a shorter duration of time, and then it could change. But once again, with the indications that rates are going to come down in a short period of time, you're never going to really see that rate adjust on your first mortgage. So if you're able to save money by, you know, taking an adjustable rate mortgage, it's not a bad decision right now because you're not going to have that loan for 30 years.
What's great too is if you're wondering, hey, is now a good time for me to refi? I've done this several times. I own a couple different properties. I have some investment properties as well, and I'll call Don and be like, hey, should I refi? And sometimes you're like, yes, great. And others you're like, nope, not worth it. And it's a phone call. That's all I have to do. I call the expert and I say, what do I do in this situation? And he tells me if it makes sense or not.
You have great tools to be able to analyze what your goals and plans are for your property, how long you're gonna be there, how much it costs to refinance compared to how much interest you're gonna save, and we just evaluate and help answer the questions as honest as possible.
All right, well, I hope you learned something today about what's going on when the Fed meets, how it correlates with interest rates, what we're predicting with interest rates. Don, what's a good way to get a hold of you?
You know, simply give me a call. My phone number is 503-975-1532. I'm happy to receive and talk about anything you need to talk about.
Well, thanks so much for listening. And again, we look forward to chatting with you in the future.